Alright, hi everyone. Let's welcome back to this week weekly market update. So as usual, let's take a look what's happening over last week and things to watch out for the coming week as well. So as you can see from the news itself, Dow, Nasdaq, they closed higher on Friday, extending their rally to a seventh win winning weeks. Alright, so it's incredible for especially for Dow and Nasdaq, which I actually mentioned in my last weekly update as well. I say that Dow Jones may hit 37k to celebrate the year-end rally, as well as the oil may actually reverse from the downside after supported by the 200-day moving average. Of course, there's other chart that which I mentioned in the last week video, but then I didn't show the charting or I didn't write in detail over here. If you want, you can revisit on my weekly market update on last week as well. So for the coming last Friday, what is happening is that as you can see that a lot of shares is actually making intraday record, like tech heavily savvy Nasdaq 100 set a record close. All the three major average score their 17th straight winning week. So it's very strong for in the current market or in the current economy, as we can say. It seems like we are celebrating the rally in advance, but while you are celebrating, always pay. Always be cautious about it because we are at all-time high. Firstly, and second thing, we know that the economy is really relatively weak. What causes the market to shoot up or go even higher, or what do I see that when I chart Dow Jones going to 37,000 at a point of time? This is last week. I said it may hit towards 37k. It's because things that actually cause the market to rally is mainly due to the market sentiment of the Fed is going to reduce the rate in 2024. As we know that we are 1 or 2 weeks more, to end the 2023, right? So this is what happens that market believe by reducing the interest rate will actually bring the rally to the market itself. Alright, so this is what happened. Wall Street rally this week after the Fed on Wednesday admitted that the effort to tamp down the inflation are taking hold, indicated 3 interest rate cut are coming in 2024. But this is just indications. After all, they still have to depend on the economy data per month basis, like the US CPI, the the unemployment rate, the non-farm payrolls, this kind of thing to determine whether will the rate uh, go according to the plan or not. But market always celebrate first, right? And that is what happening to the market right now. All right, and the other thing is that because we are at the end year, there might be January effect when we come to the next year as well. And December is actually a thin volume traded, but not due to that. It's because last Friday is also known as the option expiry date. That's why the volatility, the volume increased. This is due to the triple witching date. You can go and Google what is triple witching, which I explained before in my previous last video. It's always at the third week of the month. There's an option expiry date. So you can go and find out what does it mean. All right. So this is what happening to the whole market sentiment right now. Everyone is celebrating of the interest rate cut in the 2024. All right, so let's take a look into the chart itself then. So for the charting wise, this is Dow Jones, which I mentioned last week. I say that with the year-end rally, Dow Jones may head towards 37,000 at all-time high level. Indeed, the all-time high it break above. All right, so this is almost 37,000, so it break above. So right now, what are we looking at? Like I said, we celebrate with cautions. All right, we celebrate with cautions. Let's look into the weekly chart for the Dow Jones at the moment. We can see it's a very bullish rally for the past over how many weeks? 1, 2, 3, 4, 5, 6, 7. All right, 7 week. All right, so pay a close attention on the daily time frame. We are actually at the overbought situations. All right, on the weekly, there is still room for it to clear. All right, so I may see that this celebration may continue because, like I said, it's not at the end of the year yet. We may ride for one more week before, market always happen first, right? So we may ride for one more week before it comes to the last week of the year, and things may change by then. All right, so may continue. So I just want to continue right here, 16 December 2023. Dow may continue its bullish trend till the last week of 2023. Who knows, right? So be cautious, celebrate the rally with cautious. All right, so this is what I want to say. Celebrate the rally with cautious. So where is the next target then? Of course, after closing at 37,300, which 300 more than what I predicted, I think it's always a round figure game. Perhaps 38,000, perhaps 40,000. Who knows? All right, no one's know. But just pay attention. If you want, you can use Fibonacci extensions to you. Or otherwise, you can do whole figure of whole number by whichever you preferred. All right, so I will just draw a random whole figure. So it's at 38,000 will be what we are looking at. So this is the next resistance level. So okay, so this is what I will be looking at, and then I will look on the lower time frame to determine whether how will it performs. All right, how will it performs. If on the daily chart it shows some bearish sign. All right, it shows some bearish sign and show an engulfing sign, and that is whereby cautions need to play in the game. All right, so otherwise we will just continue to ride it up. Okay, so that's my view for Dow Jones, and then we will go into small cap. All right, so people who have been following my trading view as well, I did mention here, sorry, small cap on 9 December, I said that annual rally, I return back to 2K. At the point of time is 1,880. So did it return back to 2K? Let's take a look. All right, indeed. All right, on the Wednesday itself, the market actually rallied up almost 3.5%. More than 3.5 is a 3.52%. And then on Thursday itself, it closed at 2,000. It touched, and then the following day it just retraced back. So we can see that for small cap has been in the sideways market for many times. All right, for many times since uh, since June 2022, as you can see from the resistance. Sorry, this is the support. This is the resistance. So everyone is eyeing, will it break through this resistance? All right, so will it break through? Firstly, take a look at the sign of, if let's say the candlestick close above it. All right, close above it, the breaking sign, the breaking signal will be stronger. However, at this point of time, it's because due to this overbought level, so I may play a very cautious game here. I will not chase in. All right, I will not chase it. Of course, cutting the rate, all right, which is happening in next year. This is due to over optimisms causing the rally to spike up. Yes, cutting the rate is definitely going to benefit the small company, all right, because they are not going to pay the heavy loan out there. It's definitely going to bring a good beneficials for the small cap, but it's because of the technical perspective wise, I will play a cautious for a pullback in order for me to ride it up again. All right, so in a long-term view, I believe small cap may actually break through this and then return back to the 2,300 level. All right, but because of the overbought situation in the daily time frame, I'm waiting for a slight pullback. As for the weekly RSI, there is still room for it to grow. Okay, so my perspective, if any pullback have a higher chance for you to ride it up instead, and you're also riding with the trend, and everything is returning to 200 days moving average. So it's a kind of bias on the bullish side. Okay, so let me remove everything. Okay, and then I'll start writing it. So 16 December with 3 times rate cutting in 2024 will benefit small cap due to loans or slash debt repayment, interest repayment. Okay, so this will help the company of the small cap itself. Okay, so on daily time frame, Alright, so waiting for pullback to long. On weekly time frame, alright, so this is what I'm saying. So I will just write here. Okay, so on a weekly basis, we still have chance for it to grow higher, but eventually it need to break, alright, close and break above 2000 or at least 2010, will then give you a sign that returning back to the next of 2150. Okay, so this is what we will be looking, and then subsequently we will go to 2003 in the next few level. Okay, so break and close above, we'll see or may see, alright, 2150 followed by 230 in year 2024. Okay, so this is what I am looking at for small cap, and if we break above, then we will see here. Otherwise, then we will see here. Okay, so that is the play for small cap itself. And this, what does this mean? This will actually benefit the small cap company if you are looking into the individual stock itself. Alright, so doesn't mean you have to trade on the indices itself. You can go to the small cap, a small company, those with a good fundamental, good earnings reports, and then you may grab a chance and then ride with the wave or with the trend itself. Of course, pullback. All right, watch out for the pullback. Okay, so next we will be going to DAX, which I mentioned last week as well. So for DAX, hit all-time high on last Friday on the 9th of December, which is somewhere. Sorry, I just go to the day chart. Right, it's somewhere here. Okay, so I say that the bull momentum may continue. This is 16,900 or 17,900. So the high for this candle is actually touches 17,003 point. All right, very accurate on the whole figure, and then it touched. All right, it touched 70,000 and fall back. Okay, so 70,000 is a very good resistance. Like I said, do not chase in. We may see a slightly high, slightly going up, but the risk reward is not fantastic for you. Okay, so this resistance at 7,000 is crucial for people who wanted to short. Yes, you just pay 100 or 200 points away and you want to write it down. And people who want to ride with the trend, you may actually wait for it to enter when it touches somewhere on the resistance again. Okay, so I just randomly draw, all right, on the resistance, but you can go back and chart nicely if you know how to draw. So we are looking for some. Okay, this is what we are looking, and will it continue right the trend? I wouldn't know. Like I said, it's right now at an overbought situation, resisted at 17,000, showing some bearish candle. Then I may not want to long at this point of time. All right, so 9/16 December 2003, well resisted at 17,000. Okay, RSI at overbought level. Okay, may wait for pullback to long and follow the trend, or otherwise short and putting 70k as the stop loss level. Okay, so this is what I mean for the DAX itself. Okay, so let's take a look, and then we go into the next one that we have mentioned is actually Ford. Okay, individual counter right now. So for Ford Motor, okay, so this is what I mentioned right last week. If you're following me closely, I mentioned that this is a well support level, supported a few times. It got triggered down and it returning back to the support level. It maintained the resistance at $11. However, last week itself, the last candle break and close above. So what does this mean? This means that at this situation right now, this is considered a false breakdown. All right, a false breakdown, and it's riding up. So I will then believe that the trend may resume the upside. Okay, so what do I mean by that? This is the right. So this is the false breakdown. Firstly, all right, this is the weekly candle, and then I may see that it may continue to go up. Of course, I just purely play on the technical perspective itself. All right, I just play on the where this moving average, this moving average 200 days. Let me see what's the setting. This 200-day moving average will act as a resistance to stop it from going up. I'm not sure, but based on the drawing wise, I feel that this is a false breakdown. Yes, it may pull back for you to long because right now it's actually at the overbought in the daily time frame. Okay, so what will I do right now? I will just simply write that on 16 December, okay, RSI daily time frame overbought, and then weekly candle close above level showing previous breakdown, showing false breakdown previously. Okay, so waiting for pullback and confirming $11 as the support level. Okay, so what do I mean by that? If you're following me closely, hopefully, if you have listened or managed to catch this video, what we are looking at is that wait for a pullback and then well supported, we can enter anytime over here. Okay, so that is the play for itself. Alright, so let's save the chart and then we will go into the next one that we will be looking into is actually the US 10-year treasury, right? Okay, U. So this is what happening to the U itself. For the U, right now we know that the rate is going to cut in 2024 and it's very realistic the bond actually run down first. Okay, when the rate is going to cut, the bond U will drop. Okay, when the rate is going to hike, the bond U will go up, and that is why when it touches the 5%, the whole U market actually dropped to almost 3.91 on last Friday closing. So from candlestick itself, what we will be looking at is actually over here, the Fibonacci level. Since here to here, we are looking at this first Fibonacci level, which is the 61.8%, which is around 3.5%. Will it support or not? Okay, so for the U itself, it may continue to drop based on the candle, based on the RSI on the weekly. If yes, then it may result for the bullish trend to continue on the equity itself. Okay, so 16 December 2023, I next support at 61.8%, Fibo around 3.5%. Okay, so we will monitor this on the US 10-year treasury and then we will see if yes is well supported at this level, then equity may have a chance to reverse. So we have 2 to 3 weeks to add on it and we shall monitor it closely as well. So next we'll be talking about the counter. Okay, one more counter just to bring up is actually C3.ai. Welcome back to the AI environment as again. I have charted this long ago. You see, as you can see, right, if you have been following me closely, I'm actually eyeing a TP $70 after if it break 52. Okay, if it break 52, it didn't break. So this is the resistance level. IPO price is 42. Remember, right now we are trading below the IPO price once again. So right now the price is actually supported by these 200 days, or let's see what is this 200 days, or let's take a look. Okay, it's supported by this 50 days moving average. So on the weekly chart perspective, and okay, and the volume is increasing. So if that's the case, I will see that this resistance is playing a good level, which is around 2446 or 2750 is a good resistance level. So I am biased and then I'm bullish on this counter for C3I once again back to the 42 level IPO price. Okay, so in all the above, I just don't want to delete because this is used to why it worked previously. I'm so proud that I managed to find this counter. Right now, we will revisit once again. So I just want to write here on 16 December 2023. Okay, revisit 33.ai. Uh, major support level between 24.50 to $27.30. Okay, eyeing price to return back to IPO price. Okay, so this is my play for this counter once again, and then we will monitor it, whether will it go or not, whether will it go to 42 is on your risk management side. Right now I feel that the risk management is like risking $4 to eyeing for another $11 is more than 1:2 risk reward. Why not? Okay, so that's all for this week weekly market update. Hopefully I share a good insight for you guys on the indices itself, what is going to happen in 2024, and things to look out for the next 2 weeks. All right, well prepared yourself. Many people will be traveling at this point of time. Stay safe. COVID cases increasing in the Singapore side as well, so remember to wear your mask if you are going out. Otherwise, if this or perhaps you have learned something from this video, remember to share and like, just one click away from you. I will see you guys next week once again. Thank you.